We saw maybe the biggest use case for the crypto space, Ethereum, et cetera, over the last year has been NFTs and meme coins. And now they're coming over to Bitcoin, which I think is pretty interesting. There's good and bad, like everything. There's trade-offs, right? And so we were talking about before the break, sort of what they're really buying is just space on the block, right, on the blockchain. And so now we're seeing congestion on the blockchain. All these NFTs are buying up all this space, and then when it buys up all the space, it starts to push up the fee. So now it's more expensive to send Bitcoin, things like that. And we're starting to see revision of the 2017 block size wars, and people are saying we need to make the blocks bigger to fix this. I think it's what is that saying? Those who don't know history are bound to repeat it. And I think people should just go back and read that book. I mean, what's your take on this whole block congestion, high fee situation?
Totally. Well, I think there's a lot to talk about, and I think it has a lot of implications for the success and future of Bitcoin. And these are some realities that I think we need to acknowledge. I think this is kind of this kind of fee mania we're going through, or I would say maybe just went through, with this very big public mint that bought up, megabytes and megabytes of block space. It's a bit of a stress test for what Bitcoin is going to look like when we have 5 billion people, trying to get in block space, every 10 minutes. The reality of Bitcoin at a mass adoption level is very high fees, fees that are priced in Satoshis, the atomic unit of Bitcoin. And so, I think we're seeing, kind of the first, in the modern era with kind of, layer twos, a bit more established than they were, say, in 2017, kind of the last time we saw block subsidy meet the block reward, or rather fees meeting the subsidy. So just to break that down a little bit, when a miner wins a block, they of course get the subsidy, which is the issuance of new Bitcoin, which is a set amount and it halves every 4 years. So right now we're 6.25. And then there's of course the fees that you get from the financial transactions that have paid to get in the block. And so this is the first time since 2017 where we've actually seen the fee share of the total block reward be higher than the subsidy. And we saw that a couple days ago. And that is a reality that's going to happen. We have a halvening a year away now, and we have 30, I think maybe 29 halvenings left after that. And in which case, in around 2140, there will be no issuance at all. And it will be solely determined on if there is Bitcoin user activity sustaining the miners, securing the network. And that's going to rely on fees being high. So this is kind of a nice...
That's one reason why high fees is a good thing.
Absolutely, 100%. I think there's a lot of talk in kind of the altcoin community, chirping about Bitcoin. And when fees are really high, they go, okay, look, you can't scale. Fees are high. I can't buy coffee. And when fees are low, they say, oh, you have no security budget. You need tail emissions.
Yeah.
And it's ridiculous. It's like, no, this is what Bitcoin is going to have to mature into. And there's going to be humongous demand. And there's some mathematical realities to the limitations of that demand. And, we can't simply have 8 billion people holding their own UTXO and transacting for all their day-to-day transactions on the main chain. It just can't happen. So we got Lightning. Lightning also, of course, it requires on-chain touches when you open and close a channel. There was a lot of worry of people that had opened up Lightning channels, 4 years ago or 3 years ago, 2 years ago, when the fees were very low. And part of the trustlessness of these hash time lock contracts that uphold the trustlessness of Lightning, you set your fees for the forced closes at the time of open. And some clients weren't ready to do replace by fee to be able to actually force close your channel in a high fee environment. Is that trustless if you can't close to the main chain, right? So there's a lot of stuff we have to look at and just be honest about scaling and where we're going to go. And I think this is a great stress test because it's going to subside. The mania will die. And I think a lot of people look at this as an attack of some sort. And it's like, well, remember, this is Bitcoin. thanks for paying our miners and wasting all of your Bitcoin, doing this quote unquote spam attack, if that's what this is. You've sustained the market and fed our miners. Thank you. And now we get to learn from it. That's really how I look at it.
Yeah, I've been kind of looking at it the same way, and just so for everybody that's kind of catching up on this, if it's a little bit over your head, you can send Bitcoin on the main blockchain, which is final settlement, and now it's congested, so it's costing you a little bit more money, but you can move it over Lightning for almost instant and free. And so if you want to buy the coffee, send it over Lightning. Now people say, but it's centralized. Well, it's more centralized, but for a cup of coffee, what do I care? If I'm going to buy a house, I mean, what's the big deal? It's cheaper than a wire transfer, so I'll just do it that way. So you can choose what your fee level is, how much security you want, and so that's great. I think more security is better. I'd also say some of this potential attack seems like there's some credibility there, because it looks like a lot of the stuff that's being posted on there is just garbage. And so potentially it is, but to your point, well, they're going to run out of money, and thanks for paying for more security, which is interesting. But one thing I saw that to me seems a little bit concerning is Luke Deshire, or however you pronounce his last name.
Deshire, I believe, yeah.
Deshire. I mean, he's been a Bitcoin core developer, for a long time, for over a decade. And, he obviously hates ordinals. And now he's talking about how we could create another software update to stop them by treating them as spam that would filter out, Taproot transactions that have ordinals in it. Mm-hmm. And already I thought, and I think maybe we talked about this on the last show, was like, do we need to be more thoughtful about changing the Bitcoin blockchain, because now we have unintended consequences? And now it's like, what are we going to do? We're going to have this knee-jerk reaction. We're constantly trying to change. And I think that's a dangerous situation to get in. I don't know what your opinion is on that.
Yeah, totally. I mean, I think there's two big things there. The first one being one of the most important Bitcoin developers who was essential in figuring out how to do SegWit as a soft fork, hates a humongous amount of the activity on Bitcoin right now, and yet is actually pretty powerless to being able to do anything to stop it, which is a beauty of Bitcoin, a censorship-resistant public good. And I respect Luke's opinion. I disagree in some ways. I mean, what does that matter? But I think so. I think that's really important. And then in regards to the knee-jerk reaction stuff, I think we should be having a knee-jerk reaction to the realities of what we just went through in a high-fee environment. And if we're going to look at a change to Bitcoin, which I think inevitably, I mean, first off, we have to literally fork just to fix the overflow bug. We have a lot of time to deal with that. There's just a little time stamping overflow bug that's very easy fix, but we do need to fork to fix it. So there is an inevitability of that. But I think we got to look at the realities of what we just went through as a fee market. Make sure we're ready to really scale to layer 2 and beyond. We're going to need financial services to service 8 billion people, 5 billion people, 1 billion people. Yeah. So I do hesitate and want those to really think about this. And yeah, let's not move too fast and break stuff. There's a reason why we did SegWit, we did Taproot, and we have the discount witness, and we should remember that. And learn from the high fees and get ready to deal with it.